Stocks look set to extend their surge, and Bitcoin proves it's simply the best turnaround asset. My name's Jessica Amir, a market strategist here with Mumu. Thanks for tuning into the Daily this 9th day of May. Well, stocks are extending their rebound from those April 7 lows. We've seen the S&P 500 gain almost $290 billion in one night alone. Just an outstanding rally. That's how much it gained, with economic stocks tied to, with stocks tied to the economy flying up the most, taking the S&P 500 now up 14.4% in total from those lows. Now, tech gains are also eye-watering. We've seen the software defense giant Palantir surge 7.9% in one day alone. Just have a look at this leveraged ETF. This is a Palantir 2 times long leveraged ETF. So it's double the Palantir exposure. And so this gained 15.6% overnight. Again, an eye-watering gain. This is really because Palantir is storming back towards its record all-time high. Other stocks that are marching up include Tesla. It gained 3.1% overnight. Of course, Tesla is preparing to enter the Indian market for the first time. Their first retail outlets will open shortly in Mumbai and Delhi. But all in all, take a big step back now. Let's think about the Nasadq-100. 73 of the Nasadq-100 stocks, they all rallied overnight. And that's why the index, the Nasadq-100, is now officially in a bull market. Thanks very much. Bull market, remembering, that's a pull-up of 20%. Bitcoin, as we said at the open, that's proving that, as Tina Turner said, it's simply the best turnaround asset. It jumped 7.2% overnight, breaking above the $100,000 level for the first time, hallelujah, since February. So lots of long-term investors will be rejoicing today, while we're starting to see lots of orders come through in Bitcoin-linked ETFs such as IBET. So let's just ask the question, why are investors racing to go out and buy stocks exactly as Trump urged overnight? Go out and buy stocks. Well, investors are not buying stocks because he said so, as much as he would like to attribute that to him. But stocks are charging basically because of trade deal momentum. It's now cooking nicely with gas. The US and the UK reached a breakthrough trade deal. Trump called it a breakthrough. And it basically sets the stage for more bigger trade deals to come, of course. And investors are ultimately really focused on what's going to happen on the weekend. The fact that China and the US are looking to do a deal. The US Commerce Secretary came out overnight saying tariffs will be lowered on the weekend if talks go well. So this is really good news. All in all, big step back again. Good news headlines. This is what markets have been waiting for, and this is fueling the risk-on rally. Rounding it all out, what is backing up the rally, and why can momentum continue, and why would stocks likely continue to push higher? Well, it's a good question. I'll answer it. Company earnings, it's growing far stronger than expected. Remember, we've been talking about company earnings being released. Company earnings is still not done and dusted for the season, but so far we already know that S&P 500 companies are reporting far better than expected earnings. Earnings are up 12.3% year on year. That's far better than expected. But what about the tech-heavy Nasdaq that we always speak about? That's been fueling the rally, hasn't it, over the past 3 years? Well, the Nasadq-100 has proved that its earnings are a force to be reckoned with. Nasadq-100 companies are reporting earnings growth of 22.6%. That's a blowout result. Absolutely no one was expecting that. So markets have got plenty good excuses to keep on surging. Now, this risk-on rally is not just about equities, it's also in commodities too. And that's because if China, obviously the biggest consumer or buyer of commodities, does a deal with the US at the weekend, you'd expect commodity prices to go berserk, rally up and push up commodity prices. That's what I am thinking. I dare say a lot of people would be thinking that as well. But right now, think about this. The oil price has been down in the doldrums, right? But it's cracked back above $60 for the first time since way back when in in April. The oil price is now up 3% overnight. So I really want you to watch this stock, Woodside. Woodside, obviously Australia's biggest oil and gas company. They're going to be the 13th biggest oil and gas company in the world. Thanks very much. So they're back in the fold as a stock that you should watch. Let's round it out, push on to other commodities. What about iron ore? Obviously, iron ore essential for BHP, Rio Tinto. Well, its price picked up ever so slightly. But again, I really think the D-Day will come at the weekend. But the iron ore price is up just ahead of that potential trade deal being done with China's. Remember that China is the biggest buyer of not just iron ore, but of oil, but also copper too. Now let's think about copper. Copper is the king of the green metals. What do I mean by that? Well, it's used in semiconductors, chips. It's used to build data centers. And of course, it's essential in electric vehicles. Hello, Tesla spoke about that at the open. But copper is extending its decline, and that's because the US dollar has pricked up. For the first time in a long while, the copper price is now being pressured. But again, the narrative could change if we see a deal come at the weekend. So keep your eye on commodity stocks. What about the Aussie share market today? Well, it's a good question. The futures were earlier suggesting a positive day of trade, but I really think that investors this week will be looking at banks, particularly because we have now heard from all of the big banks, except basically CBA. Macquarie's results overnight, rather this morning, were far better than, I guess, you could expect. And what do I mean by that was they reported a far stronger than expected return on equity. Their headline profit result was in line with expectations, though, but they basically proved that they are the best bank in Australia, returning money to equity, returning money to shareholders. But I will just say this, no matter how much money the CEO of Macquarie is paid, she was paid $24 million in the full year, by the way, but the bank still only managed to grow their operating income by just shy of 2% year on year, taking up their operating income to 17.2 billion Aussie dollars. Sure, that's a lot of money, but all I'm saying is you do have to consider that, as we said at the outset, US tech companies, they're growing their earnings at 22%. And big banks in Australia are only managing just to grow their earnings at 2%. A difference of 20%, obviously. You do the math. I just want to leave you with a food for thought. Aussies really need to consider, maybe you do too, consider buying US tech stocks for the long term, for your investing playbook for tomorrow, because banks are not really delivering the mustard. Have a great day, happy trading, and I'll see you for the weekly.